Hi everyone, welcome to the proptrade.com, our daily video where we market and analyze the markets on the day, for the day, and for any time frame that you're interested in. We're going to start today. This is the crypto market as it looks on the Bitcoin chart. Let me just make my great big head a wee bit smaller. Tuesday. Any questions, guys? As usual, stick it in the box, the chat box, whether you're on YouTube or on X. Excuse me. And we'll have a look at anything you want to have a look at in particular. Our breakdown of Bitcoin continues. So yesterday, as we pointed out, we had tested into this key $75,000 level yesterday, but since the low yesterday when we went in there, we had a relative good run yesterday from early yesterday morning, the beginning of the new week. But we couldn't break over 79,000. We'll get back into the 80,000 handle. That 80,500, remember, was that end of day low that took us here, that took us down all the way over here to back here in November. So that's why that was on there, and not 80,000 itself. But yesterday's rally was capped below 80,000 and really below 79,000 as well. So we still remain very weak. Obviously, 75,000 had its first test early yesterday morning. Are we going back to test that on an end of day basis? We shall see. And then the lower level remains 70,000. So we breached the 85 and the 80,500 levels, which we'd been looking at for a while. From that break above 92 and 95, it didn't hold for very long. Here, look at the hourly chart. See here, it's a day and a bit here on the hourly chart, and we're down. So again, be careful. Just trade what you see, not what you think. As ever, this is a mean reverting strategy here. This is still sort of sideways action in the last 24 hours on Bitcoin. Nothing driving it. If we look at another setup, we look at our trend following setups like our. In fact, let's have a look at our VWAP. See where we are on the shorter term here on the VWAP. That's just 5 minutes. That's far too short. But this is how you can actually candles on the shorter time frame. We look at these similar hourly time frame, and again you see sideways action but bias to the downside over the last 4 or 5 hours. We've got red candles, not green candles, and we've got a mixture, which is always a sign of lack of direction. So there's no clear direction. You can see there's 79,000 a bit more clearly on the hourly time frame. The VWAP for the hourly handle is we're under it, and we're slipping away from it, so pressure is still to the downside, and there's that big fat 75,000 down here, which we tested yesterday. So that's negative still, or sideways action. And finally, let's just have a quick look at the good old trend following moving averages on the same time frame. Well, again, we'll have the same flat lines moving averages. This is the 20, the 9 and the 5, my crossing exponential moving average strategy. Short there, reversed out there, short again there. Here, so this one's been short this morning, from this morning since 9 o'clock, and we continue to move down. So stop loss up above the turn initially from last night, up here at 79 to 25. You'd pulled the stop loss down as we've gone down, and we remained under the 20-hour moving average today. So stop loss now set on our entry candle, and we may even pull this down to the top of that wick on the close of that candle, is how that strategy would play on this time frame, this 1 hour time frame. So Bitcoin negative here on the trend following, and sideways on the on mean reverting strategy. So nothing really to play with there. Right, I'm going to go back to the MAC and the SAR setup. Somebody asked me this privately yesterday, if I could go through this one again in a bit more detail, and I'm happy to do that. So I'm going to leave this setup on today. So they want me to, there's many lines on here, so previous levels and what have you, but I didn't mean to do that, did I? I meant to show up my indicators. Put my indicators on it with it's MACD, isn't it? I've made it go away. Bear with me a second. There we are. So our MACD's back on now. So it's Bitcoin in the 1 hourly chart. So this is also that's gone triggered short. Hang on a minute. Yes, the MACD has triggered short, even though the parabolic SAR is still underneath, and the final parabolic SAR has gone short, flipped short as well there. So, but the main trigger here is the is the signal line, and the let me get rid of that one. Let me just change it. Don't like that yellow on there. The signal line, make it a darker color. Let's make it purple so you can see it. There we are. So we've got the purple and the blue lines crossing there. They're a bit too similar, aren't they? Change that one too. That one yellow. I'll make it orange actually. Okay. So you can see we are touched here. Sorry, the first cross was here. So this was long yesterday morning. We got most of that rally. Then it flipped and we got out. And then we're waiting for the signal line and the MACD line to cross. So they've touched here. It's been a mess and it's opened up. So that would have been a signal of a potential short entry. The parabolic SAR still hasn't flipped, but that's enough to take us in because that's runs ahead. And now we have flipped. So this is short, or confirmation of this short on this hourly time frame. If we go down a bit more, we see more flipping with the MACD and signal line. So we had a cross there, and that's also above and gone short. It's gone against us initially, and it's come back. So if we'd had our stop loss above here, we'd stayed in that one, and it's gone short. If we'd had it just there, we might have kept out because we can use the parabolic SAR cross as our initial stop loss. Also, we had a flip, so we'd have got out, and then we got another short here. So this would have been short there from 78.32 about 25 minutes ago. Okay, right. I'll come back to this in a minute. What we were here for today was the what we were expecting to be the JOLTS report. We knew it was only tentative, and it looks like it's not coming out. We got a statement from the Bureau of Labour Statistics that that's not happening today. Everything's delayed because of that short shutdown we saw on Friday. So non-farm payrolls also looks like it's not happening on Friday. It looks like it's going to get pushed back just a week, but we'll follow that and keep a note on that. If you want to follow it yourself, if you go to the here, the US Bureau of Labor Statistics, so www.bls.gov is the US Bureau of Labor Statistics. These are the guys and girls that do the actual counting of the data around the country. So it's an announcement on over the weekend about obviously we had this temporary shutdown on Friday. So website is currently not being updated due to the suspension of federal government services. The last update was Monday night. Updates, this site will start again when the federal government resumes operations. So that's not happening. So keep an eye on that. And that's where the data the government federal data on the jobs front. So it's not going to affect ADP. Weekly claims will be impacted, and non-farm payrolls will be impacted on Friday. So watch that. ADP tomorrow will be as normal. JOLTS, the federal government, remember, was created out of San Francisco when Miss what's she called? Previous the previous governor of the Bank of England, the Bank of the Fed, created it when she was at the San Francisco Fed. It's all measures openings, new job openings, existing job openings haven't been filled, and the churn in the market, people swapping from job to job. So this number's been declining for quite a while, and that's been the concern. And as we saw last week with the consumer confidence number finally sort of starting to, the trend continuing to move down, it's becoming a concern with regard to the strength of the jobs market. And we've seen that, but we haven't yet seen the follow through to the economy. So the jobs of market has sort of got itself into balance. The demand is quite low, arguing about a weak economy, but we never went into recession. But supply has also dwindled quite significantly, partly to do with the clampdown on immigration by the current administration in Washington, and all those jobs getting squeezed out. So the openings still remain continue to decline as the both supply and demand side of the equation becoming imbalanced, and that's what Powell was suggesting. Chair Powell was suggesting last week. So 27.23 million was expected in this latest number from 7.15, so a little tick up, but again, obviously skewed by the extended shutdown of the government before Christmas. And it was after Christmas, wasn't it? I'm talking about. No, it's before Christmas. And obviously that's still to come. So that's going to impact non-farm payroll say later in the week. Big news overnight was this hawkish tilt from the RBA. Finally, it was in balance. Inflation came back. So we've seen some action, not afraid to act. All central banks are saying that. Their target was 2 to 3% is their range for inflation. Unlike some of the other, the Fed are looking to really get it down to 2%. The RBA happy for the range at 2 to 3%. So they've moved with an increase going in the opposite direction of many, but this could be a precursor for some other central banks, noticeably their near neighbours, the RBNZ, and elsewhere further north in Tokyo. But obviously all of that will be more clarified after the elections on the political situation clarifies itself after Sunday, assuming it will. It's looking that way, but don't count your chickens until they're hatched, as they say. So rate hike, it's lifted the Aussie this morning. It's come off a wee bit since then, though, the Australian dollar. It was, if we just have a look at the Forex market, look at the Aussie's crosses, obviously got quite a significant boost from, let's go back to the hourly chart. We'll keep this set up on. People were asking about it. So again, there you can see a short generated there as we come back through 70 here on this strategy. So this strategy on this hourly chart would have gone short at 69.91.7 on the close of the last hourly candle. And you see, that's so we did again. It's a two-part signal system. This and typically you get one. The MACD crossing standard setting for the MACD. So the MACD at 12, 26, and 9. We're looking for a cross of the signal line and the MACD line for our initial signal, and then you're waiting for a flip of the parabolic SAR. As you can see, they both happened in the same hour yesterday morning. So this went long here, there at 9 o'clock or on the 8 o'clock candle. Stop loss would have been down initially at the turn in the market, all the way down there at that, actually at the parabolic SAR. So you could, again, some people use the parabolic SAR level as a stop loss level. So off we went in the money, and then we went sideways. So if you kept your parabolic SAR where it was, it flipped on that one there. So you would have got out for a loss. If you'd ignored the parabolic SAR and just ran with the MACD, you'd stayed long. A couple of hours later, we went long again, and then we flipped again. So you either got as a continuation. So you're out when it flipped. It flipped back immediately, and this is one of the issues with the parabolic SAR. It can be quite flippy, even in strong trends. You can see there on that market there. So this morning would have triggered long. As a continuation trade. Why I'm saying it's continuation trade, because we've gone from long to out, because we flipped here, then we've gone sideways, nothing's happened. The MACD and the signal line haven't crossed. Our histograms are still positive. Well, it's not as positive, going from strong green to dark green to light green. But we flip, so we just take a continuation trade there. Our stop loss either down at the parabolic saw, the turn, the current trend, which would have been there initially. We'd have got all of that. That's then rally, come back, it's come back, it's come back. We've got a flip of the parabolic saw at this point, so we give all that back, and but we're still long. So you could either done what you did before, kept it open, ignored the flip of the parabolic saw, but eventually we crossed to go short, so it's delayed. So it's better to follow the rules and get out when that flips. Obviously, it was right on 70 as well. So you might have given up 40 pips on that one as it's turned, but you're still in the money from this move from yesterday morning as we've moved through the RBA decision. But as you can see, anyway, let's just go back to what we were talking about. Big rally for the Aussie on the rate announcement. The hawkish outlook from the central at the press conference rallied to test 70.50. Didn't quite get there. And then we've come back down, given 50 pips up, and we've now, as I say, now returned short with a big, strong candle back through the 70 level. But if we go to the higher time frame, you can see, as we on our others chart, it's still a very, very well bid. I'm going to delete that. Bid Aussie dollar against the US dollar. So big old rally from the .76 sideways at the beginning of the year. Through January, end of December through January, massive January run for the Aussie, as we talked about last week, and profits being taken there on Thursday before the month end. Aussie back on the key thing. We've been over 70, but we're now back under 70 here for the Aussie, and it's done the same against most of the other crosses. If we look at its near neighbour, the Aussie Kiwi 59. 115 to 116. We went as high as it's the day that was earlier in it's a daily time frame. So you see two big up days. Look at the early chart from yesterday. There's the RBA decision, and again similar pattern, rallying across here, and back at 150 under 116 again. So 116 was just here, wasn't it? 116 Aussie. Kiwi and the Aussie yen, the weakest of the majors. Yen still in play. Aussie, you can see, hasn't given as much back against the weaker yen. 109 Aussie yen trades as we speak, but a strong rally, and that's just given back. Flipped an hour earlier, so we had all of this rally up. There you go. So we've got the cross there, waited for the MACD to cross, the parabolic SAR to cross. So we enter here 107. 83.4, and then just trail it up, either using the parabolic SAR as your stop loss, or count back on candle patterns. May have got stopped out here last night, but there's the announcement. Obviously holding your nerve across what was expected to be a 25 basis point hike, which came, but the reason the Aussie moved so quickly was the hawkishness of the statement, and also the press conference thereafter. So we had this, there's the announcement. There's a press conference later, and it followed through. And again, Aussie yen went to 109.50, and these are beyond recent highs. If we just go up to the weekly chart just quickly on this, you can see this morning's RBA announcement has taken as I just said, the Aussie yen to 109.50, which is an area we haven't been since July 2024, so 18-month high for Aussie yen. And as you can see here, the unbroken rally. Again, this is a great example of what a great trend following indicator the parabolic SAR can be. That's why many people use it as a position for trading their loss. It just gobbles up a lot of margin, and losses, stop losses can be quite big when you're using it in the parabolic SAR. But certainly the weekly chart and the daily chart is a bit more a wave motion flipping on the parabolic SAR as we go up, but the trend is very much to the upside, isn't it? So another strong day for the Aussie and Aussie yen in particular, getting to that 18-month high thanks to the RBA earlier today. So let's go back to the dollar. So dollar's playing a bit mixed today. 117.95 here. For euro dollar. Big down day on Friday, big down day again, significant down day yesterday. and we're sort of sliding sideways so far today. But we are, key thing for round numbers yesterday was that close below. Sorry, let's go back to the daily. It was below the key 118 area. So remember we pivoted through 117 for months last year, and we're going to do the same for 118. Doesn't quite look like that yet because we burst through it and we've chunked back through it as well yesterday. It's quite a relatively significant break. It's not huge, so under 118 yesterday, not as significant as the break above it, which took us to the 120 plus area, didn't it? But we've come down quite aggressively as well in the last week. So dollar still holding its bid. It started a week or so ago, but volatility it seems to be cooler today, basically. So 118, key pivot area as we go forward into February. Interesting. Again, this is a really good example of when indicators don't work. The parabolic SAR here has still been positive. Because of the violentness, the speed, the violence of the move has caught these sort of lagging indicators out. So this would have actually, that's again, great example. So we got the K and the D line here on the daily time frame, not crossing until here on the 22nd. It would have gone long there, and it would still been long, and then it would have been stopped out because the stop loss would have been here, and it would have been whacked out on Friday's big move down. But you still would have been very much in the money, quite calmly. And this is still, this is still bid because the parabolic SAR has yet to flip, and the MACD and the signal line are yet to cross. But you can see these looks like they're heading for a cross, given this rollover here at the top. Over 120 and testing 121 as we did last week. So big move down, 300 odd pips from the top, and we're under 118. So we'd like to see bears, if this is going to continue, these are going to move away from each other and move back up, which they sometimes do, to back over 118. But if this crosses, this could give it more momentum, and then down to the 1617 zone, which sits around about here. Around about here, where that entry level is there, 116.94. You can see that from an old trade. And then obviously 116 to the downside at 117 had proved more significant last year as a sort of a pivot magnet. Will that be this case this year as well, or are we going to do it around about 118? Too early to tell yet. But anyway, dollars holding on to its gains from last week or so, but a quieter day today. Same with dollar CAD, 136. 136.60, similar pattern. See if it's inverse the other way around. Dollar yen we had a look at 155.86. Dollar holding those gains, but less so far than the last two trading sessions, Friday and Monday. But again, this one's still short, but looking to cross to go long here on this end of day basis. Nobody's here today. Right, okay, so let's just go down to see what's going on our short-term time frame. So that's the yen, Aussie, CAD, sterling 136.77, down again today. Now it's all bounced a wee bit. Look at the hourly chart. So bounced a wee bit today, but sort of consolidating now around the sub 137 level. Yesterday we were at 136.25 recently, around about close yesterday. Go back to the Bollinger Band setup. It's got some more stochastics. There we are. So that's our sideways actions on sterling. We saw the decline in crypto to that 74 level. Oils, the pressure or the geopolitical pressures cooling somewhat. Russia announced, apparently it had a week's reprieve of bombing Ukraine, but they announced they were going to start again. I didn't notice that there was any missiles not flying into Ukraine over the last week, but that might just be me. Oil here up today let's just go back to yesterday's A big move down, huge move down yesterday. We've bounced a wee bit today. Again, volatility, is the key. We've been lower today, 61.20, and that's where the 20-day moving average sits at just under 61 now on WTI. Big decline on Monday over the week after the weekend's news. So we bounced a wee bit today, but it's a bit of a muted bounce, and you can see here on the hourly chart is just around the 62 level. I'm not sure why that one's there. Let's change that to just a 62. I think there's a intraday level. So that's put that in there. 62 dollars that we went through yesterday and then pivoted around that, and we've broken away a wee bit at the moment. So it's 62.75. Whether we'll hold that or not, we shall see. But again, indication of potential move. Certainly there, this morning's 10 o'clock candle would have been a trigger of a move higher. It's been a bit muted, but still we've moved from 62.27. So it's a 50-cent move currently. We've been as high as maybe $1. So that's probably why we've got some profit taken there. So oil ticking up this morning. I'm saying this afternoon here in the UK. It's evening time if you're in Asia, and it's obviously morning time if you're in North America. Stock markets closed positively yesterday, 37 points, 37.41, up half of 1% for the S&P 500. The Dow was the big gainer yesterday, a whole fat 1%. And the Nasdaq 100 was up. The wider Nasdaq was up 0.56 of 1%. The Nasdaq 100 currently trading at 25,455 here on our platform. So it had a good morning, and it's had here. As the cash market is opened at 2:30 my time, so 45 minutes ago. We've moved lower. And we've given up 24,005. No, we haven't. Yes, we have. We have given up 24,500, 25,450 at the moment. So yesterday's recovery has pulled us back down. You see the good day yesterday, end of day basis. Oops, trying that up. So good day yesterday, down day again today. So it really isn't where to go. We had really strong Palantir numbers yesterday, not everyone's favorite company, especially here in the UK, but they're up 10% in opening trades this morning. Walmart also not part of the Nasdaq, but has become it's up 1.5% today. Became the latest company to be valued at $1 trillion. $1 trillion. That's a 1 and 16 zeros, $1 trillion in America speak. AMD, the chip manufacturer, has earnings out. Merck, Pfizer also later on today. The two big global, two largest pharmaceutical companies, American-based, with their data later on. Long-term business these guys are in. So Nasdaq down today from a big bounce yesterday after two down sessions on Thursday and Friday last week. So, but that's down from all-time high. So we're still relatively well bid in this channel, as I've been saying for a while. And 25,000 is the key horizontal level. And many will be getting twitchy about if there's a significant break. And as we went all the way down to 24,000. Here, the end of November, we saw that bounce up. What we didn't get up initially, did here. So this is the final flurry of this session. So see how we go into February. February, a notoriously poor month actually for stock markets. Good for some other good commodities like gold and what have you, but stock markets not typically have great February's. Some of the worst days of the month come in February, June, traditionally. But anyway, so far today we're down. We're trading at 24,460. Opportunities obviously everywhere, always. So look how the Nasdaq would have started for our opening session today. So we've got on our 5-minute time frame. There we go. There's a cross. There's the touch of the outside of the Bollinger Band. Let's just put the The 2:30 open. There's 2:30. That's the opening trades. It was already short. It'd been short, and it's smudged short. So we may have closed it on the open there, or just kept some open. That was a big move down, so I'd have kept that open, and then might have got out on that retrace, that first retrace candle there at 14.45. But we've continued to decline. See how the price action is pushing prices lower. The MACD, the stochastic hasn't reacted. The stochastic's tried to cross and tried to move, but it's flattened out. We haven't had a clean cross. That's why I say don't jump in too early, even on the short term. 1 minute and 2 minute, 5 minute indicators. Wait, patience is key. We've got 2 consecutive green candles potentially here for the first time for a long time. No, first time since 13.25. So first time in 2 hours on the 5-minute candle, we've had 2 consecutive green candles. So that may be suggesting we found a floor, maybe suggesting that the move down needs a bit stronger of a retrace. It's probably more relevant. But where's it happened? Is it a round number? Is it a key number? 25,440. Sounds like a round number to me. So see if this materializes. Not moving because of the flatness of the stochastics there. Not moving at all. The momentum you see here, as the ATR's risen, so the size of the candles has increased, and it's all negative, isn't it? Just ahead of the open. So this would have played out really nicely there. We'd have got short there. There's a touch to the outside of the Bollinger Band. The clean break would have been about this candle or this candle here. So we'd have got short certainly there on that one there at 1 o'clock, 5 to 1, something like that. Went against us initially. Stop loss above the top of the Bollinger Band there, or even it was flattening out. So yeah, but I mean that might have, if you got you've got a stop loss. If you've got your stop loss a little bit too tight, you'd have been stopped out. But let's have a look. Where was the high pre-market high of the day? Pre-market high was there, so I'd have been happy to have my stop loss up there, given that we were sort of sideways, having a move up. So my stop loss would have been there, certainly, if we've been trading this on the open, because we'd have monitored that. But at that time here, obviously at 1 o'clock, still an hour and a half before open, we were closer to the high of the day than the low of the day, certainly. The low of the day was, where's Monday starts today? Started right about here. Yeah, so actually the low of the day was there, so it wasn't much of a range, was it? Very tight. And that's there we go. You see, that's a classic there. See that one? See what we say about always, plan everything, guys. Set it up. So that would have been your low of the day. The high of the day would have provided our stop loss level because it was there. We'd have got short. Right. Sorry. Let's just ignore. Let's try and ignore what's. Let's move that over. Let's ignore what's gone on there. So at this point, when we've taken this is just crossed. We don't know what's going to happen, but there's our high of the day. We'd been perhaps looking for a long, and we'd been long, haven't we? Let's just let's have a look at this. So we'd been long from down here as our first cross. We were in there, gone long. We might have been stopped. Yeah, we'd have got stopped out because it had gone against us, but we were still, the trend was still with us. So it gone down again. Might have got in on that candle, may not, because we've been stopped out twice, but this is moving quite aggressively now. So at this point here, 12.05, an hour before our last trade, looked like we were edging lower, didn't it? At this point, we were closer to the pre-market low than the pre-market high. Looked like we were edging lower. However, this was a big engulfing candle here at 5 minutes past 12, taking out 1, 2, 3, 4, 5, 6 bodies of the candle. See what's happened there? Big engulfing candle here on this 5-minute chart. It's extended the rally here on the stochastic. So it's although we've moved down, it's been a big. What's at the end? Well, didn't know, but it continued to rally, and it didn't run out of steam until we got all the way up there. So whether we actually got that leg up, having been bruised here, the system would have traded it. So we'd have had some losing trades here as it was coming down, still in the under half of the Bollinger Band. The big turnaround is this turnaround candle here. Remember, price action is everything. 12.05, and then we followed through about half an hour, moved to touch to look to go to cross to short, and now we're about, again, if I can just here, again, by now this move here, as we've moved up, we're now closer to the pre-market high than the pre-market low. Price then stalls as we've crossed. We've got a, and we probably might have got in there. Certainly would have got in there. It goes against us initially. How do I? So there's our top entry roundabout here. And again, if we'd had our stop loss a bit too tight, we'd have been stopped out on these candles here. But certainly we could have had it at the top of the Bollinger Band was rising still, so roundabout there. But I'd probably had it here. I wouldn't perhaps have had it as early as that, because that's back at 3 o'clock. This is the European, so 8:30. See what's happened here. So the European high isn't as high as the Asian high. Where's the Asian high gone? Oh, it is. Sorry, that is the sorry. That I thought it was at 3 o'clock in the morning. It wasn't. It was here at 8 o'clock. So this is the European Open here. 8 o'clock was our high. So that could have been our sort of extended stop loss. But I'd have pulled that down as we've gone through there. And this is now off and running, isn't it? The orange line remains nice and angled down. The blue line's been touching it and crossing it, so we've got a bit twitchy. But certainly. We'd have got first target here, second target there, and you might have been comfortable having had this losing trades here. If you hadn't have taken it all off, because the trade was, the stochastics were still moving down, and we still had quite a nice, not a very steep move, but it's a nice angle as we've gone down. We moved into the overbought here, and you might have got out here ahead of the open. So I'm not going to get caught out in the volatility of the open. Fair enough. I'd probably have done the same if I did it manually. But the system would have closed some out on the touch of the outside of the Bollinger Band of the candle, on the initial one here, and then kept it going until we'd got in here, and then waited for a cross. They touched here, but the upside was it was more profit to be squeezed out before literally just now, is it? Oops, just do that now. Yeah, it's literally, is it now? Yeah, so now we've had this. So there's the move, there's the touch, and we move away there. So it would have been out on this one actually, that green. So it would have been that green candle there because it's moved away. We're overbought. We're looking to go long. It doesn't happen. The price action continues to move down. We've had a cross there. Still not enough to get us in. Maybe on this completed this candle. And I said 2 green candles. It didn't transpire, did it? It ended up green. So this is still negative. So we haven't had 2 consecutive green candles to show us the bottoms in there. So we're still negative. This one may have a uptick, but the trend is very much to the downside. So if we go up to the higher time frames, where were we on that? Well, we've been actually sideways. So it's the announcement, it's the noise around the US Open that's been the significant move today. So opening here on Tuesday has been negative from a positive Monday. So this could be a sign of weakness for the rest of the day, potentially, in this first hour of trading, which is just coming to an end. So NASDAQ down. Is the Dow doing the same? Less so. Look at this. Dow, different candle pattern. So it's very much sector dependent. Those tech companies moving. Dow, the best mover of yesterday. We've had follow through buying today. We were up 1% yesterday. The Dow 1.05%. So we're up at open, and now we're up here. We're up pre-open and up again here at the moment here. So again, it's the Dow is my preferred 5-minute trend. So it's interesting. We've gone differently. So there's the open at 2:30. So again, that had been short. Big old candle there though, and then it's wiped you out very quickly. Then triggered. It hasn't triggered a short because it's ran. There we go. See. So let's just follow the rules of the strategy. So there's the cross. It didn't happen. It's triggered long here after the open. So we got in here, stop loss all the way down here initially. It's scary, but off we go. Big turnaround. and then down. So we're still long, ironically, even though we've well, actually, no, you should have crossed there. So two ways of trading this. If you'd put your stop loss at the bottom of the opening candle or even down there, you would have still been holding this as a long. However, the strategy has crossed again. The K and the D line on the stochastics has crossed again in the neutral zone, in between the 80 and the 20. So less significant. However, it's held at the 5 minute. Again, we didn't know this at this point. It's held at the 5 minute. Sorry, it's held the midpoint of the Bollinger Band, the 20 period moving average on here on the 5 minute, and then it's biased, moved up, even though this is moved down. So yeah. So you've been looking to stay in, but you're certainly not short on that because that's held and hasn't broken down. So you might be looking for a continuation trade to the upside this time if we get a cross here on a clear cross on the K and the D line. But have to wait a little while for that to come to fruition. And are we going to test the high there? That would be looking for the 49,640 at 640, whatever it was, 650 in fact, wasn't it? There we go. So we got to 49,650, and we sold off. Again, looking at this one today started here. Pre-market high was again here at 8 o'clock, wasn't it? Yeah, 8:15. So the opening candle's taking us through the European Open. There's the pre-market low. We actually gone lower. So again here, literally 5 minutes before the cash open, we'd produced a new pre-market low. So that was suggesting for weakness. That hasn't happened in this first hour of trading. But are we going to go down and test that? So that's to watch going forward. Downside. This is the European low here at 11:30 my time here at 49,345. 49,290, say, for the sake of round numbers, just pre-market. And the actual market low is our open here at 49,310, 300. Let's call it 49,300, keep it round numbers. And our current trading session high is 49,600. Well, again, call it 650, 49,650 for the sake of round numbers, to the upside. So that's the range for this first hour of trading. And it's sort of biased to the upside, given that we've held this short-term 5 minute 20 period. If we go up, like to say, to the 15 minute time frame, you can see that would have still been buy. So big start, retrace, and then we bounced here. So again up. So again, you see that crossing there, and that would have got you long on this candle now, having been chopped there, wrong there, down there, stopped out, and up we go. So Dow moving in different direction to the Nasdaq, and the S&P usually follows the Nasdaq, and indeed it is following the Nasdaq to down. So again, short. Oh, interesting. It hasn't touched the outside of the Bollinger Band there. So that we've got a touch here. A long position probably here, as it's confirmed there at 11:45. Target 1 didn't get to target 2. Interesting. Look at that. We're still long, and then it's gone back. It's crossed here, so that's it's a flat trade. Yeah, it's gone up, and then we've crossed here, and there is when you've gone closed the long and then gone short here, and that's played out quite nicely. You're still short on that one because that's gone from there. There's your first target, right on open. So you'd have closed some of it certainly because that was target. We got him right in the bottom and kept some open. I might have taken some off after first 10 minutes. Actually, this is the 15 minutes. Sorry, sorry about that. It's 15 minutes, so it's a bit messier on the 5 minute. It's a bit cleaner there, but yeah, same movement to the Nasdaq. So didn't get it. We haven't got the two green candles here either on the S&P, but we did get quite a substantial bounce 5 minutes ago. But interestingly, we didn't close above the opening candle of the 1520 candle, so it's still biased to the downside, one would argue, but you would have been out on that move there, and that move, certainly that move there. In fact, you'd have only got that, wouldn't you, on the stochastics? Look at the stochastics. So we'd got in here, traded it, first target. Oh, it's taken a while, hasn't it, there? So it's moved on, it's gobbled up all of that, but certainly that cross there would have been, in fact, that would have been enough. That would have triggered another long position there on this candle here All right, on the open. So there you go. The open's triggered. It's closed negatively. See what's happened on the close? Let me just zoom that up a bit. There's the 230 candle. Lots of volatility on open. Well, not I'm saying lots of volatility relatively to what had been gone on before, but that would have taken you long there because we've had a cross in the overbought area on the stochastic, and you'd have been long. Where be interesting to see where to put your stop loss. Either might have been down here somewhere. That so stop loss would have probably been down there. That level from last night. Anyway, that would have been a losing trade, and then it's gone up, so it's messy. It's messy as far as this strategy is concerned because we're trending. It's not reversing, so the trend continues to the downside. Remember, this is a mean reverting strategy. Stochastics notoriously flip, but we're trying to move down. But we remained. I mean, the story is we've remained in this overbought area here on this 5-minute time frame, but we've moved, lower in the hour since we opened. Let me just put I'd say that the S&P is less. I find it less tradable than the other two, and the Dow's my favourite of the two. Nasdaq has a bit more. Nasdaq 100 here has a bit. Is also ahead of the S&P when we're trading indexes, but you can see the bias remains to the downside today, similar to the other two. Okay. So there we are, and we've done our metals. Yeah, we had. How can I miss gold? Big recovery today. Is it over though? Let's just go up to the hourly chart. So actually, let's go over to this is all old news now, and everyone I'm sure aware of it. You've been caught out by that. Massive sell-off last week, having just got to a new all-time high briefly intraday on Thursday at 5,600. Huge panic sell-off, end of the month. Profit taken, all the rest of it. Some liquidity questions, shorts getting squeezed out, longs getting squeezed out, weak holders getting squeezed out. Down again yesterday, went all the way down to 4,400 at one point yesterday in the Asian session, but bounced quite significantly today. And it looks like we've opened, not in engulfing candle, but we've opened higher than we closed yesterday. Look here on this derivative chart. Same on the LME. The bullion chart in London this morning. So we opened higher than we closed yesterday. That's relatively positive. And so far today, it's obviously not over. An empowering positive candle, certainly from yesterday's activity. It's filled the gap to the upside from Friday's close to Monday's open, and we're in the upper half of the Bollinger Band again, if this candle closes like it is. However, here on the daily time frame, you can see the indicator is still sensing wariness on this. But the fundamentals, as somebody was saying this morning, I was listening to, haven't really changed for the gold market. China remains a huge buyer. Are they buying on the dip, a bit like the equity market? We're coming into a strong period for gold. Traditionally, the Lunar New Year is a couple of weeks. Is it next week? I think it's next week, isn't it? 16th. Yeah, the horse, isn't it? Lunar New Year, the big holiday, not just in China, but across the Asian zone, East Asian, Southeast Asian zone. Big holiday. China's closed for a whole week. Other countries like Malaysia, Indonesia closed for 4 days. A big holiday. And gold is seen as a token of those holidays, as a gifts, both jewelry, even derivatives, perhaps, or bits of paper. But sort of stuff. I say those fundamentals that have driven the central bank buying and countries hoarding, individuals hoarding. These have lifted gold today significantly. So. Positive day. We're currently trading back over 4,900. Say from that dip to 4,400 yesterday. No matter how brief it was still real. Somebody was really buying down here or really selling down here, lest the price wouldn't have gone down there. So some burnt fingers for many, both institutional and even corporate and country details. If there've been panic sellers of the yellow stuff, but a significant bounce today, and the trend here on the hourly chart is up, and we've topped out as we saw on this hourly chart just before we went to the daily chart. So there's our rally back through 4,900. And we've gone sideways since really the LME opened, the London Metal Exchange opened this morning. And really, it's probably why you guys are so quiet. There's not a lot of gold trading going on, given the narrow ranges we're in. But we are still sub 5,000 here on the derivative market. I know the spot market was just shy of that earlier this morning. So bounce back. Where will we go? Who knows? Trade what you see. Trade the time frame that you trade. These parabolic moves don't last forever. And they say everything we said about gold has been exaggerated in the silver market as well. Two different markets though. Remember, silver is an industrial metal as well as just a precious metal, and it's not just the miners that bring up silver. It comes up with copper and other base metals as well. So it's much more of a volatile asset. Always has been, and I guess it always will. I mean, look at that hourly chart on the silver market. What goes up slowly suddenly explodes and moves down very, very quickly. As you can see with the stochastics here on this compressed hourly chart, they can be very, very volatile. So, be careful as ever. Don't get your stop loss too close. Don't get it too far away. If you're losing a trade, keep it small. Stay in business. That's the mantra that I always stick to. So I'm going to wrap this up. We've been here nearly an hour now. The key thing with regard the data, just watch the BSL, the Bureau of Labour Statistics, but it looks like that nothing is going to get published for as you can see, has it dropped out? JOTS has dropped out of today, Tuesday. It's disappeared because it was only tentative. Has dropped out. Non-farm payroll is still there? No, it isn't. US government data may be impacted the shutdown. Tentative events are subject to delay, revision, or cancellation. So keep your ears to the post. I will update you on, and obviously the marketing guys will update you on our Discord channel. I'll put some notes on, but the data that will still be coming out. We got the key jobs data from New Zealand just before 10 o'clock my time here. We got the first reading of CPI inflation for Europe tomorrow morning. I will be with you for the ADP tomorrow. That is a private company, ADP, private payroll. So we'll have a handle on that. And the ISM services PMI, because that's the Institute of Service Management. That's also a real piece of data. Remember, the manufacturer was much better than expected yesterday, 52.6. Is services going to see a similar boost? It was already 54.4. It's expected to decline. Manufacturing was expected to rise. Was expected to rise yesterday and did better than expected. Services, on the other hand, is expected to decline nearly a whole point. So see what that comes. That'll be really interesting tomorrow afternoon as well. And then Thursday, Bank of England, Central Bank of Europe, ECB, and jobs, weekly jobs. Again, they'll be limited. And consumer confidence. Remember that consumer board, consumer confidence last week, the weakest since 2014. Big question mark now hanging over consumers in the US, and they've been remarkably resilient, as I've been saying for seems like 2 years now. They're finally cracking. Is it the tariffs? Is it the political upheavals in the United States? Affordability was going to be the big mantra of his second year into the November elections, but can Trump move quickly enough? Inflation always sticky, always slow to get its fingers in, its tentacles in, and its impact on the economic outlook. So we'll see as the year progresses. So I'll leave you with the gold market, not the silver market. I'll leave you with the gold market. Not a lot going on. Let's come down to see if there's any opportunities in the short term. Just be careful trading this. I'm not trading that. That's just sideways action. I mean, you could catch a bit, but there's down. That was up a bit. Then was that was just look, it's one spike to the outside there, looking for a cross. Actually, it would have worked out. You've got shot. Well, there you go. So it's touched the outside of the Bollinger Band there. Next target is there, where you wouldn't have taken that short there because that's just touched. It hasn't crossed. confirmation. The gap is there, but that's, so you've been short here, stop loss up here, and you're out of the money now because it's gone back, but we're still moving down. So that's yeah, because it's not directional. It's not really revert. Well, I suppose it is reversing across the channels, but that's still short, but out of the money. There you go, just showing you nothing works all the time. Don't expect it to, and if you lose, keep it small. Don't overstretch yourself. Always watch your risk management. So that's all for today. Thank you for your time. Those of you that are here, if you're watching this later, best of luck. I will see how stock markets close. So really, it's going to be comment from central bankers. We've got plenty of that this week that might be moving things. Obviously, watch anything Trump says, whether it's economic, whether it's about Epstein files or Greenland, Ukraine, Russia. Iran in particular, they don't want to talk about nuclear weapons. They don't want to talk about ballistics. So all sorts of imponderables still to kick around, and all geopolitically a bit cooling, which is why we've had the rally in the stock markets a bit. But gold moved up on the worry around Iran. It's come down a bit. So, nothing's done yet. Nothing's signed, sealed. So on we go. Let's have a look at some of these earnings. So I'm going to go and have a look at the Merck and the Pfizer earnings later, and decipher the AMD numbers as well. So no JOTS today. I will see you tomorrow for ADP. That will definitely be out. See how the market moves. So leave you with gold going sideways, dollar still holding on to the gains, crypto and Bitcoin in particular under pressure at 77,400. Not as low as we were 20 minutes ago when we went to 77,000 again. So the trend remains to the downside for Billy Bitcoin. So take care, everyone. I'll see you tomorrow. Be good, be safe. Let's see you